Well, welcome to Drill Down Earnings. We have quarterly results up from Zscaler, that important company in the world of cybersecurity. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research, where we cover the 50 most interesting companies in technology. Zscaler is that and more. It's a friend of the show because CEO Jay Chaudhry has been on many times in the Drill Down. Probably get him back soon. But this was second quarter 2025 earnings for this company. Wall Street looks for beats and misses, and this was certainly a beat. Pretty good quarter from Zscaler. And this business is growing, and it's growing really nicely. Growth is still zipping along here. We want to use Z words with Zscaler because why not? But 23% year-over-year revenue growth, pretty good. $647.9 million for this company. Their billings also up 18% on a year-over-year basis. So while it's not growing as fast as revenue, it's still something we watch. Their margins had been steadily improving, now taking a little bit of a dip, but still on a year-over-year basis, a negative operating margin of negative 6%. It's not great, but it's better than it was a year ago. One of the big numbers we look here, of course, also is book-to-bill. How many orders do they have coming in that are sitting there waiting for them to take advantage of? And while book-to-bill was down 4% on a year-over-year basis, again, it's a little better than last quarter when it was a little worrisome. They signed some really big deals, and they talked about the kinds of deals that they were signing. And these are with really big companies, Fortune 500 energies and utility companies, a global 2,000 financial service companies and retailers, big government agencies with hundreds of thousands of users. And the whole idea here is selling them identity management to sort of bypass the notion of firewalls here and use zero trust security. These guys are really the dominant zero trust company out there. And they have really garnered a lot of market share out there, but we continue to watch the progress as that book-to-bill is maybe not as aggressive as we'd like for a company in a growth stage like this. Nonetheless, the results were seen positively in Wall Street. Stock up 5% in after-hours trading, which makes up for the losses of the last year. Stock was down 5% for the year coming into it. So had you waited, say, until 5 minutes before the market closed to buy the stock, you would have gotten all the gains of the year, which is one way to look at it, which is to say flat for the year. Now, as I mentioned, their billings growth has recovered for this company. Calculated billings on a year-over-year basis up 18%, as revenue is growing at 23%. So it's coming closer to that revenue growth rate and kind of positive. One of the reasons for that isn't about signing new customers, it's about getting their existing customers to spend more. So their average recurring revenues for their existing customers is rising, which says, they're selling the right stuff and they're expanding more seats and more solutions to their existing customers. Here's what Jay Chaudhry had to say on the conference call.
So the question often gets asked is, if agents are used, the headcount comes down, what's the impact on a seat-based model, if that's what your question is? We haven't seen any big changes yet, but I do believe some of those changes are coming. No matter what happens to users, there will be more communication among users, machines, workloads, and in the future, more with AI agents. AI agents is just another entity for us. We are on the Zero Trust Exchange to enforce policy for all communications. More communication means more traffic. That means more value delivered to our customers. We expect our pricing to evolve as agents traffic grows as well. In the past, we've seen customer headcount reduction from time to time, and in most cases, we're able to keep up or grow our ARR by upselling additional modules. We think that we have an active role to play to secure agent communication, but also using AI agent technology in ZDX and data protection to help our customers, and for that, we can charge additional dollars as well. And we have been charged, for example, ZDX, where we started selling Copilot. Now we're moving to agent. We're able to charge higher prices for those products that Zscaler has.
All right, so what's it all mean? What's your big drill on earnings takeaway? And what's the one number that tells us a whole lot? I've got that. So Zscaler Q2 2025 earnings out. Pretty good quarter from this company. Your essential summary, your drill on earnings takeaway here, what you want to remember, your cocktail party conversation about Zscaler, if you should be pressed into service. 23% revenue growth on a year-over-year basis to nearly $650 million. Still zipping along here really good. And their book-to-bill has steadied. Their book-to-bill is now 1.1. So that's better than it has been in quite a while, and that's good news for this company. Increasing their book-to-bill, and the book-to-bill of 1.1x is just what you want to see from this kind of company. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.